Hi, this is Amin. I'm a registered investment advisor based in California. This podcast will give you a quick 5 minutes or less overview of key economic and company specific stories which drove the financial markets this past week and look forward at the key events, economic releases, and company activity which could influence markets over the next week. If time serves and conditions warrant, I'll also update you on where key signals stand and how they influence the portfolio I run for myself and for my clients. As always, feel free to share your thoughts, feedback, and observations to me at amin@fpmcapital.com. This week, there were two significant events which drove the market. Nvidia announced earnings after the close on Wednesday. At this point, Nvidia is the largest company in the world by market capitalization, sitting at $4.3 trillion, and it is at the epicenter of all things AI. Nvidia's earnings and revenue exceeded analysts' expectations, but its revenues from data centers was slightly below forecast, and the market responded cautiously to its results. Net, Nvidia earnings turned out to be a non-event for markets. The second key event was the release of PCE, also known as Personal Consumption Expenditures data for the month of July. PCE measures the prices paid by U.S. consumers for goods and services and is the Federal Reserve's preferred inflation gauge. For July, the PCE index rose 0.2 of a percentage point, which is at an annualized rate of 2.4%, and came in line with forecasts. The core PCE price index, which excludes volatile food and energy costs, rose 0.3% for the month and 2.9% on an annual basis. The annual reading was the highest since February, suggesting that underlying inflation pressures remain. Finally, consumer spending rose 0.5 of a percentage point in July, indicating resilient demand even with inflation remaining above the Fed's 2% target. Market response was muted initially as the data offered few surprises. As we head into next week, we celebrate Labor Day, which symbolically ends summer, and we typically go from the lower volume days of August into banks and trading desks being more fully staffed. We also hit a seasonal period, September and October, which can be rough for markets historically. Next week's key data point comes next Friday when monthly unemployment numbers are reported. The consensus estimate is 80,000 jobs were added. This report comes after the epic downshift in the July numbers, where only 74,000 jobs were created, and more significantly, May and June numbers were revised downward to reflect virtually no growth in employment. The Federal Reserve is now viewing labor as the key factor in determining potential interest rate cuts. And a weak August employment report will likely pave the way for not just one, but multiple interest rate cuts in the months ahead. The other key report due next week is the earnings announcement from semiconductor company Broadcom, which will occur on Thursday, September 4th. Broadcom is an important leader in AI infrastructure, including custom AI chips and networking, and also provides a mix of semiconductor solutions and infrastructure software. Finally, in terms of portfolio positioning, one of the key signals used in the portfolios I manage is tactical. It is basically offensive, cautious, or get the heck out of Dodge. With volatility hitting new yearly lows, we remain in a low volatility, stock market positive, risk on mode, and so portfolios continue to be fully positioned and on the offense. Let's see what the week ahead brings. Here's to hoping for the best, but being positioned and ready for all possible outcomes. Look for another episode of the latest market flashpoints next Friday, and feel free to share your thoughts, feedback, and observations to me at amin@fpmcapital.com. Please like, subscribe, and feel free to share this episode with others you know who may gain some insight and knowledge from the information provided. Take care.